Hey, how's it going? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Ken Armstrong. How you doing today, Ken?
Man, I'm good. Thank you. And good morning, Dan. Welcome from Canada, I guess, right?
Right, exactly. And you're in Tennessee. It must be getting hotter there, right?
It is getting warm. You mentioned that I look darker, and yeah, I had a chance to mow the yard yesterday, man. So I'm just down here in East Tennessee. Glad to be on your podcast.
Good stuff, good stuff. And I got some great news for you, Ken. I don't know if you're aware of this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate players. That means buyers, sellers, deal sponsors, operators, brokers, you name it. And you might ask yourself, why would you do that? And the answer is, if you've ever heard of an off-market deal, these are the private deals that you're not allowed to publicly discuss, then you should know that the SEC requires that you have documentation of your prior substantive relationship, or else they'll get ants in their pants, and that means that you might end up losing your business, which is bad. So that's why we have people on here get that documentation all in place. And the best part for you is you'll find that you won't only learn to more effectively communicate on the subject of commercial real estate, but also figure out how my guest fits into those deals. But before we get too excited about real estate, Ken, do you want to say a thing or two about yourself?
Hey, man. Pardon me. You might have to edit that, Dan. But I'm from East Tennessee, born and raised here, just sort of a good old farm boy with a little bit of education. Been chasing commercial real estate deals for the thrill of the deal for officially 20 plus years and unofficially as a farm kid for 40 plus years. And so playing in dirt, working with dirt, and then things that go vertical. So thanks, Dan.
I love it. I love it. So the first segment that we always go through, it's the five distinct motivations. Before that, I always got to say, but wait, check your eight. Now, Ken, you mentioned being a farm boy. I don't know how good you are with technology. Maybe you have the ability to see through the camera and down into the user's device down there. There might be this hideous subscribe button, and it's downright embarrassing. Maybe they should do something. Okay, it's a stupid joke, whatever. Anyway, the
I've
five
heard of the
distinct.
subscribe button.
Right, exactly. So the five distinct motivations. I've now spoken to literally hundreds of different people in this space about their business and why they're doing it. And one of the most important things as a person who's inside real estate is to know what's going to keep somebody from throwing in the towel. What really is their motivation? Because these deals take months to close, they take years to go full cycle, these commercial deals. So you need something really big to keep going when things become a problem. The first motivation that I'm going to go through, I found that even though people have their own unique why, they fit really well into these five different categories. And the first category is preservation of purchasing power. What on earth is that? Some people already have a portfolio of assets that they use the proceeds from ownership in order to pay their bills, make ends meet, and that sort of thing. If that's the case, you don't have to have a job to get your income, your work optional. And you might ask yourself, well, if you don't need to work, why are you bothering to make another acquisition? And as far as the reasons for that, there's a couple that stand out most significantly. The first one is when inflation rears its ugly head, it's going to be time to make another acquisition because the inflation is going to eat away from the purchasing power of your cash flow. The other circumstance is when there's a lot of distress in the property as far as like the owners, an asset crash, something like that. And don't get me wrong, you should always try to buy at the steepest discount you can. But people who are in this situation, they're not going to pull the trigger unless it really, really makes sense. And I'm not actually that far in my real estate journey yet. What describes me personally is trading time directly for wealth. And part of that is because I don't know if you know this about me, but I'm from the internet. So that means I have to cast a wide net and I have to basically get these little slivers of equity in different deals in order to make all this stuff work. And that's what I'm up to. And just to give a little bit of background, I figured that out because I came from the CRM space. I owned an agency as a full stack developer. And then I ended up working for a real estate firm that was flipping 10 houses a month, or at least they were doing 10 house transactions every single month. And when you see that when you get a bigger and better salary, you end up paying more and more in tax, and then people can be out there making way more money than you do and paying way less tax, it will inspire you to pivot and say, how do I get rewarded for deployed capital as opposed to straight salary? So that's what I'm up to. And I get that that's a little abstract, especially for youngsters. The more common motivation for youngsters tends to be that they want to hustle like crazy right now and fast track their retirement. But the more universal or the more ubiquitous motivation is that people want to control their schedule. They want to work fewer months per year or fewer weeks per month or something like that. They want to be at their kid's baseball game and not have to beg their boss for it. And that's what's attracting them to real estate. And that's fantastic, except for the fact that some people think that this is secretly everybody's motivation and that's what they're really striving for. But I assure you that's not the case. Some people are fueled directly by ambition. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. And that is why they're going to hustle like crazy until they're into their 90s. And that might be vilified in some circles, that sort of attitude, that ambition. But at the end of the day, these properties, if somebody's going to be taking care of them, you need somebody who's motivated to stick around into their 90s. And that's why these guys are great members of the GP teams. And the last category, they're also similarly motivated to keep hustling and hustling, but their focus is a sector of society, or maybe it's the environment, maybe it's animals, who knows what it is, but they figured out that there's a big financial component to making a big impact, and that's why they're making their acquisitions. So Ken, as far as these 5 different motivations, what combination of them would you say describes you best?
Yeah, man. In this case, we'll use the metaphor saving the best for last, so to speak. It is certainly a combination of the last one here. I wrote on LinkedIn yesterday, I've transitioned, if you will, moved toward, started gravitating toward this whole vision and mission of leaving a legacy. And so I've, embraced that over the course of, heard about it, been in plenty of discussions with various men's groups as far as some of my sort of free time, if you will, through where I practice my faith. And so this idea of slowly letting go of the things that may gravitate toward the idea of self, and then shifting over to whether it be a family legacy, your name, your family name, or what your family has a history of, and then if whatever they've been a part of, the family, what can that mechanism, or how can that mechanism, whether it be an inventory of assets, literal money in whatever vehicle they've got it, how can that be truly catapulted into something larger, if you will? And I'm not in the camp of I'm out here on 6 or 5 of the 7 continents or anything like that. But I've lived, worked, and played in a few other countries, and appreciate what we have not only in the United States of America, but yes, some things that we do have and other places don't have. That idea, to allude, not to be vague or coy or anything, but then also just passing along whatever little nuggets that I can disperse verbally or physically as far as my capabilities to just someone younger.
Mhm.
So there's the last one there, and then in combination with Dan, to answer your question, so to speak, uh, the one that was related to your wording there, the verbiage with wealth.
Mhm.
Um,
Try time for
uh,
wealth, right?
I'm
Instead of
sorry.
salary. Time for wealth instead of
Oh yeah,
salary, right?
absolutely. Yeah,
Hmm.
for me, I mean, a lot of um, just what one way to put it, what do you get up and what do you really value on a daily basis?
Hmm.
And so it isn't necessarily looking at that bank account number, but that wealth, the big W, really that's a utility. What can you do with that?
Hmm.
And that's the reason I say in combination with the last one here. I hope that helps, man.
Oh, definitely does. Definitely does. But the next segment is asking about risk. And I deliberately put it here because when you talk about motivation, it's easy to sound starry eyed, optimistic, even a little bit naive. And there are plenty of risks involved in every type of business, and real estate is one of the most mature of the bunch. So, one thing that I want to share though, when it comes to this question, if you've ever been involved in one of these off market deals, these private syndications, these 506B deals, then you will have had to have filled out this questionnaire, sometimes called a suitability questionnaire. It's got all sorts of invasive questions about your finances, like your net worth, stuff like that. Fairly uncomfortable stuff. But when I was going through the questionnaire, there was one question in particular I felt it lacked utility. It didn't matter which answer you chose. I didn't think I could really use the answer. It wasn't really telling me something that I could put into context. So I made my own one for this interview, and it's a fill in the blanks question. It is. There are many popular investment asset classes, but I think blank is too risky. So, Ken, it can be inside real estate, it can be outside real estate, anything out there. What do you think is too risky for your investment dollars?
Of the nouns that are attached to the vehicles that are on the open market now,
Hmm.
I would say crypto and um, dude, you've got me here. I'm going to be some uhs and some thinking here. So
Honestly, crypto is pretty good because at the end of the day, it's just appreciation. You buy low, you sell high, or you lose, and you need more
yeah,
plays than
yeah,
that in real
and
estate.
like you say, it's just what person this where they're at on the scale, if you will,
Right.
as far as aversion. And then the words escaping me. It's
Another
not
type of
art.
crypto,
It's
like NFTs. Is that what you're thinking about?
NFTs. Thank
Right.
you. Yeah,
Right. Okay.
yeah.
Yeah. I totally get that.
So
It's
that those sort of two general categories, if you will,
mhm.
uh, for me, that would be too risky.
I
So
love it. I love it. So that brings me to the next question. And this one here, I actually avoided this for the first couple hundred chance encounter interviews because I know there's some people that they're more like the PR, the marketing department. They're the front of house, the face of the company. And so they're not going to be big into underwriting. They maybe haven't even taken a course specifically devoted to it. But as a result, I felt like this was too much of a fastball. But now that I've done over 350 of these, I figure, you know what? It's fair game. Even if you are front of house, you're still going to have a few different metrics that you hone in on to say, hey, this is a better deal than that one down the street. And for anybody in the audience who's only listening and not watching, I'll read out the 14 that I have on the list. You're of course more than welcome to pick another one that's not on here. It's not a exhaustive list, but they are cash on cash, IRR, which is internal rate of return, cost per door. Of course, this is a little bit leaning towards multifamily, but the cost per door. Next is net operating income. Then there's the going in cap rate, which really means what sort of discount are you getting compared to the other local properties. Then there's the loan interest rate, which is particularly important if there's any seller carry. The occupancy rate, which is the inverse of the vacancy rate. So it's the same thing. Is it full or not? Then there's the average income where the property is located. The amortization period of the loan is also very important if you're going to be assuming a loan. Then there's the difference between the market and the in-place rents. Then there's the population growth where the property is located. Then there's the sponsor record, which is how many deals have already gone full cycle and how many deals are on the go with this particular deal sponsor right now. Then there's the waterfall split or exit strategy, which means what happens to your investment after your capital has been returned. And then I have DSCR, which is debt service coverage ratio, which means how much of your revenue from rent is going out the door immediately just to pay for the loan. So Ken, once again, if you tend to rely on different numbers, feel free to say them. But if you want to give like a top 3 or something like that.
Yeah, man, sure. Let me see. Population growth, market and versus in-place rents, and then average income.
I love it.
And I think at average income, probably you're alluding to cash flow.
When I say average income, I mean average income where the property is located. In other words, like blue collar, like that.
Yeah. Okay. Let me retract that then. I'll pick cash on cash.
Okay, that works. I'm eating up that answer like a delicious subscribe sandwich. Isn't that
man, that's awesome.
Right? That's
now,
about
now
it.
I'm going to have to eat a Subway sandwich today.
Right, a subscribe sandwich. But anyway, that's my reminder to bring up the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And the importance of it is that I go through all 6 roles so that you can not only learn how to more effectively communicate on the subject of commercial real estate deals, but also so you understand how my guest fits into those deals. And as I go through the 6 different sides to explain them from zero, you might say to yourself, hey, I really need me one of those. Well, the good news is it's absolutely free. You go to dandoesdeals.com. There's this great big button with a picture on it. You just click on it and you hit the print button, out it comes. And you heard me right. I committed the cardinal sin of marketing, which is you never, ever, ever give away your freebie without asking for some sort of contact information. But I did that just because it's so important to me that you learn how to express this stuff really proficiently, because I do think your career in this space will depend on it. So let's do it. First role, the most visible person is the repositioner. They're the acquisitions people. They're talking to the public. They're looking at a whole whack of different deals. They're doing a whole whack of different paperwork. They're talking to the different brokers to find the best deal that's available out there. So why are they doing all this paperwork? What exactly is the art to this science, I guess you could say? Well, they have to underwrite the deal, which means they do the math, they do the arithmetic, because they need to figure out, first of all, where are we right now? Because it might not match what the seller or the broker is saying it is. And the repositioner's job, the repositioning, is changing how the business is run so that it makes more money. And the most peculiar part of being a repositioner is you have to have a wide network of financiers. Financiers are people who are not on the GP team. They only deal with the owners of the property, paperwork, and money. That's it. So the reason why a repositioner needs to have lots of financiers in their network is because if you can secure a cheaper loan, aka cheaper money, that goes straight to the profitability of the building. So they need to know lots and lots of financiers. But the repositioner's next spot to look is the operations, to stop those Benjamins from going down the toilets. But of course, there's more to operations than just unclogging toilets. I already mentioned that I'm from the internet, so you might wonder, well, how can you fit into one of these GP teams, Dan? Well, the answer is there's a few. One is the digital assets, like the websites themselves and all that sort of stuff. And honestly, because I tend to focus remotely, that means that it's probably going to be the bigger properties where you have a third-party property management anyway. So why would you need a guy like me? Well, if that third-party property management can't fill the units, you need somebody on the GP team with some serious marketing chops to get those units filled, because vacancy is the enemy. So that's where I fit in on the operations team. But of course, there's only so much you can do to make the operations more profitable. So the next step that repositioners look for is they get a contractor team involved to do a value add, upgrade the property so it's nicer. The idea being that the next residents will be more than happy to pay more in rent than the previous ones because it's a nicer place. But if
Sure.
only things were that simple, you can go ahead and spend on contractors, but it doesn't mean that you're going to get a return on the investment, especially if you're gold plating the toilets. So, what do if you're like me and you're from the internet? Well, you're going to need locals. You're going to need boots on the ground, somebody who lives nearby who can be there in an hour or two. Because me personally, I'd be stuck at an airport in an hour or two, even if I really had to be there as fast as possible. So you have to have that local involved to keep an eye on the contracting team, make sure that they're keeping to schedule, they're not using subpar materials and things like that, and of course making sure that the operations aren't sloughing their photos. But for the next piece of the puzzle, let's do a hypothetical. Let's say you are deciding to become a repositioner. Maybe you are already an engineer or a physician or an attorney, something like that, and you say to yourself, hey, I know how to buy a house. You just put down your down payment, you borrow the rest. So I bet if my friends and I pool 100K each or something like that, we could take over that 350 unit apartment complex down the road. So you pool your resources as a repositioner, you make your offer, and you turn around to the financiers and say something like, hey, I want to buy that property. It's tens of millions of dollars. You don't happen to have, I don't know, say tens of millions of dollars you want to lend us, do you? Well, the
Right.
financier is going to have a rude awakening for you. And if you have a mentor or a guru or something like that, I really encourage you to listen very carefully to this next part. The reason why a financier would say no is because they're going to ask first, who's your sponsor? Who's your
Yeah.
KP? What's that all about? At the end of the day, these lenders are doling out their depositors' money, and they need to make sure that you're not going to just buy the property and run it into the ground and make the principal completely unrecoverable. So they're going to need somebody in the fold who already owns a similar asset, or your team is not going to be eligible for the loan. On top of that, you need a certain amount of liquidity to show that you can run the business. And between the ownership team, you need a balance sheet for collateral of at least the amount of the loan. If you have all that, you got yourself a commercial real estate deal. So Ken, I know that you're also a CRE broker, so there's going to be some different roles with that. I'm not sure what sort of roles you're going to be in the actual deals if you're doing them, but where do you fit in?
Yeah, probably. Dang. Um, a few of those with the background, like yourself, putting together uh, just in different assets or different aspects of, say, real property. But anyway, operations, I have a background with that. I enjoy facilitating that, uh, getting past or checking that box or that side of the Rubik's Cube, if you will, there in operations. Um, the and as a matter of fact, and as a matter of fact, on the local side, I mean, everybody's local to their place, right? But it's how they plug into or jump on the train of those other sides of the cube.
Mhm.
And so I try to stay in my lane, and my lane is literally in East Tennessee, the Interstate 75 corridor in my markets. I'll use the word intimate because it's where I've spent over the course of 50 plus years my life. And so that's where local, but then also local operations, local trade areas, et cetera, plug into and give that other part of the cube, the financiers, the GPs or whatever, that sort of warm fuzzy about, okay, is the broker, does it meet up with, or is it true? Are they shooting the crap on this property? Is it stucco or is it real brick? Do the pictures match the litmus test? And so that's what I enjoy. And truly, as the saying goes, boots on the ground. But then I've already forgot some of the other sides of the cube. But anyway, uh, just trying to match those up, trying to be the conduit to get to those other sides of the cube, if you will, in my right here in little East Tennessee, I guess you could say.
Perfect, perfect. And you actually answered my next question, which is buy box. So Tennessee, 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 and we can make sure that people reach out for that. So let's talk about people. And one of the things that I emphasize is that coming from tech, you get a lot of people in tech who are very antisocial. They're not big into hanging out and being in a big crowd and stuff like that.
That's not
So
you, Dan.
right, exactly. But the thing about real estate though is people are so eager to give introductions, referrals, build new teams all the time. It's a really friendly environment, and that's fantastic. But at the same time, because of our own unique skill sets, we're better suited helping some people more than others. So me, I'm the guy on the internet. So of course, the sponsors and KPs, they have big enough businesses where someone like me can actually really make an impact. Whereas like when you're first as a local, you need people who are putting in 80 to 120 hours a week. And that's just my 120 hours don't differ that much from somebody else's. So it's better to get me for the think first and execute after part. But at the end of the day, everybody is in the business of deploying capital in real estate. So financiers, of course, I'm always very eager to speak to as well. Ken, as far as you're concerned, especially in the capacity as a broker, I'm sure it's the repositioners, even the locals and the sponsors you'd be eager to speak to, and then deploying capital is everybody. Who do you want to mention specifically as far as who you can help more?
I think over time, I mean, the sponsors, getting them, either finding them, locating, sourcing those deals, and over time, I mean, it's just it with the sponsors, it is absolutely a matter of trust and relationships. And so, providing the right fodder for that, the right ambiance, the right environment, and it just, especially on the note of being the internet person, uh, we can jump over, plenty of hurdles even on the internet getting to know the person. That's what you're facilitating here. Glad to be here for sure, but uh, and yeah, the financing gurus, those Excel geeks, if you will, that's awesome. I can appreciate that. I've have a history of that. Uh, but you just got to balance that with, you know, the motivation, like you touched on first. It's like, okay, why are you doing this? Why are you giving me your time, Mr. or Ms. Sponsor or sponsor group?
Mhm,
What is it you really are trying to achieve here?
mhm.
And just seeing if there's a match. I've learned to say no.
Yeah.
I've learned to preface whatever deal it is. Hey, let's have that exploratory convo and say, hey, look, let's just take a pulse here. And it's
Exactly.
okay.
Yep.
It goes back to my why. And it's like, okay, that's cool. You might fit into my why, but if I don't fit into your why, that's okay. Hey, man, just go, continue life.
Mhm.
And that's cool.
Great, great. So I'm sure people are eager to reach out. Let's talk about that. Me personally, I got this really distinct last name. Makes me really easy to find on LinkedIn, which is the platform where I spend most of my time. As far as social media goes, if you're eager to get some books and stuff like that, you check out Amazon.com. I've got a few different books on subjects relating to business skill building and that sort of thing. But if you are thinking about raising capital, getting into this business, and getting that startup investment, I encourage you to pause the video. You can use your phone to scan this QR code because that goes to the FAQs page of 506 BME, which is the platform where I offer assistance in getting that documentation and maintaining that documentation for your substantive relationships. So even if your laptop falls into the bathtub, when the SEC shows up, you don't have to be afraid that you do have lost that documentation. But if people want to reach out to you, Ken, what are the best ways? Social media, website, phone, email?
Yeah, sure, man. I'm on LinkedIn, just my name, Ken Armstrong, and just read a little bit of the description, Tennessee Commercial Real Estate Broker, or the website, Ken Armstrong Group, all one word.com.
Perfect, perfect. And that brings me to the last part. It's not for you, Ken. It's for you in the audience. It's my public service announcement. If you've been watching this episode and experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it's because of the downright hideous subscribe button, and you can get rid of that for free. Full disclosure, the reason why I want a whole bunch of people to click on the button is because then YouTube will actually start to pay for these videos instead of me. And I think that would be amazing. The trade-off for you is just that my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions. I just really appreciate the fact that you spend this time with me. Just like Ken, I appreciate you joining me. This has been great.
It's cool, man. I will say, I guess I'm had a brain, you know what here, but I do not see the button. I got to go to YouTube.
Exactly. I love it.
Okay.
Thanks, Ken.
Yeah.
This has been great.
All right, it's good. Hey, appreciate it, Dan.
Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506 Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot.
Maybe
Bye.
it's, oh, why did I see that?
Cool. Okay, I know what I'm going to do.
I know what you're gonna do too. And
As you're talking, I'm like trying to. This is a perfect, perfect little game. I love it.
no, not that one.
I was actually like, uh-oh. I'm like, oh, no, okay.
And then you thought for a second, Emma, bad move, bad move.
I
Right.
see what you're doing, but I can't stop it.
You've absolutely pinned that one down.
Oh, yeah.
When did you take my queen? This is very distracting.
Yeah.
Oh man. Yeah, I don't like you so much, Dan. I'm just saying.
Finally.
I really. Let's be honest here. You'll probably never speak to me again. I'm just not coming back. I don't know.